Hi, people. Thank you for stopping by at Building Wealth with Rajeev. If you want to make serious money in trading, you may want to hear Pradeep Bonde. He started with a very small capital 20 years ago, and now his portfolio runs in millions of dollars. He invented strategy on his own called momentum bust, among other strategies, but this is his main strategy. He demonstrated his strategy using certain examples on the interview. He talked in length what made him such a great trader and what new people need to do to become great trader. I hope you enjoy the interview. If you like the interview, please share and also subscribe to the channel. Pradeep, let's start with your trading strategies. Like what brings you money?
Primarily, I'm an active trader. I'm looking for move called 3 to 5 days kind of a move. In 3 to 5 days, stocks make 8 to 20% move, or if they're higher price stocks, they made $50 to $200 moves in few days. So my primary strategy, or 75%, 80% of my money will come through doing active trading. At the same time, I'm looking for longer magnitude moves, not necessarily longer term, but I'm looking for episodic pivot, which is another strategy which I use. In episodic pivot, I'm looking for a trade which might give 50% or 100% or even more in a few months or quarter. Now, the combination of those two, because if you just focus on the finding the episodic pivot kind of bigger trades, there are not enough in a year, or the frequency with which they come in is not really regular, while 3 to 5 days momentum burst is like 50,000 moves like that happen in a year. You can enter with a very close stop. You take 8%, 20% profit in a couple of days, sometimes in 2 days, and you're out of it. And then you find the next trade and you find the next trade. So that's what I do very aggressively. I trade very aggressively. And that's my primary strategy. Means I have other strategies also, but primarily it is all dependent on momentum burst and episodic pivot, a combination of the two. And I trade both sides. I trade long, I trade short, I trade all time frames. If the market is not really suitable for 3 to 5 days kind of a trading, then I'll trade a intraday trend also.
And how do you decide the market is not ready for 3 to 5 days?
I have a market timing model, which is based on market breadth. So based on that, every day I create a scenario, what is likely to happen for next 3 to 5 days. So if the scenario is like you are going to be having a correction, or we're going to have a volatile period, and then the 3 to 5 days setups may not work, or there is more whipsaws in those setups. So in order to avoid that, then I might go on a lower time frame, or depending on the what is called as situational awareness, I decide whether to go focus more on short side or focus more on long side, right? Most of the time, it is mostly long side, because most of the time market keeps going up. But if there are periods like the last 2 weeks ago, I got a signal and then I started shorting very aggressively. I was short a lot, and then like a couple of Monday, the market again like gave a signal, and then I've been long now. So it really depends on the market conditions and my ability to read the market conditions dynamically. That determines my strategy.
And what has been the probability of success so far, Pradeep?
I mean, so I've been doing this since 1998, 1999, and I have multiplied my capital several hundred times from where I started. It's like see, the whole thing about this kind of trading, it's a volume game, right? And I make so many trades. So like this month has been one of the very good months. I already, like in the first 10 days itself, I was up significantly, 6 digit plus kind of a things in just like in a couple of days. And then 2 days ago, single day, I made a 6 digit plus kind of thing. So it really is a function of, but can everybody do it? No. It's basically primarily possible if you have the expertise in doing the kind of trading which I do, where like many days by 10 o'clock, 11 o'clock, I'm up 30,000, 50,000, 70,000 sometimes. By the end of the day, I might be up six figures. So, but it is not everybody, again, and it's also a function of the size which I do, because I do really big size also, and the capital which is available for trading. I trade several million accounts, so it is possible to do that kind of a thing. But I mean, it's like I've been making money every year. I have not had a negative year. I would like, and I can always make money. The conditions, market, initial 3-4 years, it was not like that. Initial 3-4 years was like very up and down kind of a thing. Now I'm very clear what I'm doing. I know what I'm doing. I dynamically change strategies. I'm on top of the market. I'm top of my trade. So it's not really a challenge. It's not really a big challenge, basically.
Okay, so what's the, I think since you're a lot of profits are and your key strategy is momentum burst, right? Talk a little bit about momentum burst. How do you? I know you have a model in place, but how does that? How the mechanics of
really,
that?
like, and what happens if you study markets across the world? It doesn't matter whether it's a U.S. market, whether it's a market in Singapore or Australia or whichever country, right? Stocks inherently. I'm talking about stocks. I'm not talking about indexes or ETFs. Stocks inherently, when they move in this momentum burst of 3 to 5 days. So a stock which may not be going anywhere will suddenly start busting out, and it will go up or down. And in 3 to 5 days, it will go down or up 8 to 40%. If they are lower price stocks, they might go up 40%, 50%. Higher price stocks may not make that kind of a move. And if they are very high price stocks, which is what I primarily focus on, which is like stocks priced above $90, $100, then in just a matter of 3 to 5 days, they can make $20 to $200 moves in dollar terms, right? So this allows you to get into a trade on the first day of a momentum burst. If you get in early on the first day of a momentum burst, then you're holding it for 3 to 5 days or till the momentum lasts. Okay, and as soon as the momentum is over, then I'm out. So I'm doing this kind of 3 to 5 days moves and selling into strength and then getting out and finding the next moves. And because there are so many of these in a year, you never run out of opportunities. On any given day, there are more than I can buy. So there are so many opportunities. Same thing happens on the short side. Like I'll show you some examples, like where I did trades recently, like just 4 or 5 days ago, where I started a stock, and immediately in 2-3 days it went down 10, 12, 15%. You collect your money, and you find the next trade.
So why wouldn't we? I think this is a great thing. Let me share my screen with you. Let's go.
Okay.
Let's go through a couple of your trades.
Okay, you can see my screen.
That's awesome. I can see your screen now.
Okay, so this is an example of, like, say, a momentum burst, right? This is the signal to buy this particular momentum burst, and in just a matter of 4 days, the stock went up 13%, right? And in dollar terms, $175. Again, you'll see a momentum burst here. 4 days, the stock is up $186, $118, right? Or like, say, let's look at, like, say, something like.
So just a question here on Shop. How did you find about the momentum burst? What was the underlying indicator?
So the underlying indicator is like, and I have scans which I run. So here, like, and if you see the green triangle, it came in on the scan on that particular day, right? And on that particular day, or say NVDA, this is where I found this particular stock, and I actually held it till this particular day. So it made a $39 move or 25% move. So this is a very common phenomena. If it is a high price stock, hourly is an example of a high price stock, right? And it had a momentum burst here, and from that momentum burst, it went on to make around $55 or 10% move. So this is very common all the time in stocks, where stocks make, like, say, AutoZone, again, momentum burst of 6 to 7 days, $87 it made a move, another momentum burst, and it makes in 2 days $29, $30 move. Similarly, on the downside, you can see that it makes a momentum burst move. So this is primarily what I trade as, like, and I say here HC. If you see here 6 to 7 days, it makes 16% to move, $28 move here again. It's making a move now, 11%, 6%, $11. So I primarily trade this momentum burst as a move, which happens all the time. Like, it's like, you can always find trades. MELI, again, like, say, in 3 days, it made $59 move, again making a move here, again making a move. So I scan for this momentum burst, and I try and buy them on the first day of the momentum burst move as early as possible, because I buy them early as possible. What happens is those momentum burst, if you buy them early, then you get part of the first day's move also, and then you hold it for 3 to 5 days till the momentum continues, and then you sell while they're going up.
So
And then,
do you use your stop loss or something here?
yes, I do use stop loss. I keep moving my stop loss up as the stock moves in my direction, and then uh, when it reaches certain percentage or profit targets, then I move my stops more aggressively. And then I start trailing those stops. And then if it starts reversing like this, then I get out of that trade automatically, basically. So that's really what is my main way of making money. This works on the short side also. Here, momentum burst and the stock went down 17% or 16% in just 4 days. Here again, momentum burst and the stock went down 16%. So this is a very profitable uh, setup idea if you can do a lot of trades in a year, right? Because
This
every
is
time
your
you're exposing
proprietary
your
model, is it?
this is something which I discovered myself by doing a lot of going through a lot of every day I study stocks which are up 20% for the week. Okay, so I study stocks which are up 20% for the 1 week, and then I write down observation. I've done this study for multiple years, and I used the data of 40 years to do this kind of a study to find stocks which make in a week 20% plus move. And then I found what is common in that stock, how does the move start, and how to scan for them. And I scan for this. As you can see, there are so many moves like this in a week. Like as of now, there are 26 moves happening like that. So I scan for this kind of stocks, or I study these, and based on that, I developed this momentum burst as a model many years ago.
So
And
if
I've
somebody
been
has to learn this momentum burst model, probably would have to talk to you and subscribe to, or get mentorship from you.
It's not necessarily means like a lot of the information is in public domain. I was writing a public blog. So on my public blog, there is a lot of information to make it work. There is this is not something which is really like secret. That is inherently how market operates. Markets have always operated this way. Even if you go back and look 60 years ago or 70 years ago, it's always moved in momentum burst, sharp momentum. And so if you can make 8, 9, 10% in 3 to 5 days, and you can compound, then it becomes a very good way of making money. The key to doing this is really your ability to get in early on the first day of momentum burst, and then not getting greedy and start holding it for a longer term move, because these moves are really going to be just like 2 or 3 days. Here, this is a momentum burst which is happening currently. In just like in 4 days, the stock has made 22%, 22% move, right? So, and how will I find this? Because my scan, when I run my scan, the stock will come on that day in my scan. So that's how I find trades all the time. And there are 50,000 moves like this in a year. So you will never have a shortage of moves.
There is no fundamental basis for this, Pradeep?
The fundamentals basis is not
earnings
really required.
Earnings or profits or
Nothing like this can happen on any stock. You don't need to know anything about this stock. I buy stocks which I don't know a thing about them. It's just the money which I don't really know the stocks which I trade. Okay, means unless I'm doing my other strategy where I do research or look at what is the reason why they're going up. Here I don't really care. I'll just look at a stock. If it comes in my scan, and if it is a good stock, I'm going to buy, like say Lee. Okay, see here Lee. Okay, so it was in the scan, so I bought it. Right here, it was in the scan, and I bought it. I don't know even what this Lee Auto does. It has Lee Auto written in it, so it might be an automobile company. But all I care about is making money, right? And I don't care about what the company does.
Okay. Now, so this is against the Canslim strategy, isn't it? The company has to have certain level of earnings, and they have that filtering mechanism.
Yes, the Canslim strategy is basically a growth investing strategy which tries to find stocks which have earnings or sales growth And they have a number of criteria in terms of institutional sponsorship and looking at all those things. But uh, that's more for like those who want to do a lot of work to make money, because you can find using Canslim stocks which make 20% move, and you can find by just running my scan also stocks which make 20% move. So I don't really want to be like spending time and effort and all going through all these things, because there is no difference in a stock with earnings making a 20% move and a stock with zero earnings and nothing making 20% move. Means at least my bank doesn't say that because you made this money not using Canslim strategy, it's not going to accept that money, right? And I can do the things like they spend time, effort trying to identify, because stocks, I don't know what this stock does, but in 5 days or 6 days, the stock made 31% move. So that's really what the difference is. Canslim is more for like investors and people who have like want to know what they're buying. Means like their need for knowing what they're buying is what leads them to that kind of a approach. I don't know what this company does, but like, and it comes in my scan, and in 4 days, 5 days, it makes a move.
So, I mean, so this strategy you've been, Pradeep, following for about 20 years. In terms of percentage, how much possibly this strategy has multiplied your wealth? I mean, is that
several months? Like, and I started with a small account, and now I have like so much. I trade over 20 million account now, and I have like, and I've invested in other businesses. I own automobile repair shops. I own rental property. I have other investments, all using this kind of an approach. Basically, it really depends. Means, can anybody trade this? No, right? And means you have to get into depth of it. You really need to understand. You really need to put in some effort to understand really the patterns, or like they really put in an effort. And I can like easily make money using this kind of things, because it's not dependent on the market direction. Most of the time, there are always moves. The people are saying that the market has been very choppy or something in last 3-4 days, but there's so many moves which are happening here, right? So
today is what, the 23rd of July, and what's your indicator saying about the market in next couple of days?
I'm like a bit cautious. Means like in terms of taking means I'm cautious to the extent that I saw a lot of trades happening today. But in terms of really having position and capital at risk, I'm not really very cautious. Means I have positions and I have a lot of capital at work currently. So it really is a function of how much confidence I have in a particular setup, basically. Let's put it this way. So if I see a setup like this and I like that setup, I'm going to go in for it even if the market is falling. So that's how it is.
And are you looking forward to the earning season? Is it dependent on earning seasons or anything?
Earning season, really, like this is one strategy which I trade, but there's other strategy which I trade, which is like based on earnings. But the problem is that not many of those kind of trades show up every day, right? And it's not going to be like every day you're going to find a trade like that. So Docu is an example of that kind of a trade, where there's an earnings here, and from the earnings, the stock has been going up, right? And so I try and find this kind of stock based on earnings, which I call episodic pivot. Again, that is a methodology which I developed around 20 years ago. So episodic pivots are like if you're watching a serial or movie, and then there is something dramatic which happens and the arc of the story changes, right? So similarly, the company comes out with earnings or sales which are fantastic, and then the stock takes off, right? And a good example of this is like last year, Farfetch, right? Farfetch here. So this is what like, and I see here, and the stock went up and make 212%. So I have a complete methodology to find this stock. I look at in the night, go through stocks which have announced earnings, like today, for example, like Snap announced earnings, Pins announced earnings. So I go check their earnings, and then based on the earnings, I decide what kind of a move it is likely to make. So this is more research-based kind of an approach, but like the moves can be very, very explosive. In this particular example, this is the trade which I took on this particular day, because the earnings came in on this particular stock and the earnings was very good. So in this particular trade, like I didn't buy it at the end of the day, I bought it on the first print. So because I had done my work in the night and I had looked at the earnings and I was convinced that the earnings was game-changing earnings, so I bought this stock at the opening print. It is called OPG, or opening price guarantee order, or market on opening order. So I got into this stock at $9.88, right? And this particular stock in just 5 days or 6 days went to double. And after that, it has gone up almost 400%, right? So this is EP, where I look for setups like this. The problem is, in a year, you are only going to get 25 or 30 setups like this, right? So if you are totally dependent on this kind of setups to make an year, it can be hit and run kind of a thing. 1 year you'll get a bumper crop, next year you'll not get anything, right? Or you're like waiting for things. So
Yeah.
I supplement this strategy with my momentum burst. But in this strategy, if I have a high confidence in that setup, and then I risk a lot more. So if I risk a lot more, then I can quickly get the account up significantly. This is another example. Fastly here, this was like again earning CP on this particular day. Again, I buy all these stocks not after like they show up in the scan, but I have a methodology. I identify and I buy them on the opening print. So I bought it and then it went. But like I had significant, means like big position. So that made a big difference. NVDA was like one of them here again. Like so a lot of these are like recently.
So these stocks are
SWBI.
expensive though. I mean, all the stocks, NVIDIA, Fastly is still okay, but let's say MELI, you talk about Mercado Libre, NVIDIA, these are like, NVIDIA now is split. So it's about 192, 193.
Yeah, but like this is where I make a lot of my money. Most of my money I make on this high price stock, because I buy lots of 3,000 shares stocks like this. So if they go up $200, then you're like, you get a lot of money, right? These are stocks which the retail investors don't want to trade because they're scared of high price stocks, right? High price stocks are very good for making money. If you look at high price stocks like Shopify, right? And this particular thing, this particular swing is a big swing, and that's like $248 swing, right? So that allows you to make big money. The breakouts are just like 1 or 2% on the breakout day. They may not be up much. So as a result, you can make a lot of money. AutoZone, which is my favorite stock, I traded this multiple times during the last 20 years. And every time it makes a swing move, it makes a big swing move, right? That's $131. If I buy 3,000 shares, that's a lot of money, right? Orly, another one. So I really focus on the high price stocks nowadays. As my
but when you had small capital, what did you do?
I used to trade smaller price stocks also. Nowadays, like most of my buying is on these kind of stocks, the higher priced ones, mostly $90, $100 plus kind of a thing. I will take a smaller price stock if it is a episodic pivot, like say GRWZ was a smaller price stock, or Fastly was a smaller price stock. But for most of my active trading, for swing trading, I try and get into like these kind of bigger, higher price stocks, because higher price stocks, 2-3 days, they make $30, $40, $50 or $100 move. You make a lot of moves,
let's say a person, Pradeep, with a low capital or a starter trader, I mean, they want to use your strategies. So they would probably go for the lower price stocks, isn't it?
Yeah, but it works both ways. It works on lower price stock also. Like these stocks which I showed you here, many of them are very low priced. Right? The strategy or the inherent nature of the move is not dependent on the price. It only depends on what is your capital, right? And if your capital which you are trading, the capital which you are trading is small, then you might want to go into the smaller price stocks, right? Say something like this is a $8 stock, but inherently
it's just that your gains will be smaller, but the strategy works.
Yeah, gains will be smaller, not necessarily smaller in percentage terms. You're still going to get 20%, right? 20% in 6 days or in 4 bars. Tell me how many investors make that kind of a money in a year holding also, right? It's a question of you have to look at like if lower price stocks make bigger moves.
Okay.
It's just a question of you exploiting that.
Yeah, sure.
phenomena is what
No,
is the
no, I
problem,
get it.
right?
I get it. Tell me one thing, Pradeep. This, this strategy. What remains your allocation on one trade at one point of time? How do you manage position sizing?
It depends. Because I'm a very aggressive trader, my position sizing is very large. I know these means I have very high confidence in this strategy because I have been trading and I know what I'm doing. I invented it, so I'm not dependent on anybody to tell me. So many times I'm 50, 60%, 70% on a trade, even going up to 100% on a trade, like something like NVDA. I can have 100% on a swing trade. Okay, that's how you can make big money. How do you make big money? You make big money in two ways. You make big money by taking big positions, but then I manage the risk, and I'll explain you how I manage the risk. But either by taking larger positions or doing large number of trades, right? If you do 5,000 trades in a year, and if you just make 3-4%, you're still going to make a lot of money. And you can do larger size trade, then obviously that's a different equation. So when I do take a larger trade, if I'm taking, say, NVIDIA as a large trade, right? One of the things through my research which I found is that here on this particular, say, like this is a breakout, right? Typically stocks don't, the failures doesn't happen on the first day of the breakout. The failure happens second or third day. Seldom stock is going to fail on the first day. And because I try and get into these very early, because I have ways and means of finding this early in the first half an hour or first 20 minutes, I take a large position. So people typically, if you know, most of the traders, they do what is called as a pyramiding. So they buy, and if the stock goes in their favor, they do add to that position, and then they add to that position. I do a reverse of that. I start with a very large position, and then I quickly take profit on my part of the position. So if I say buy 3,000 shares of NVIDIA or 5,000 shares of NVIDIA, and it goes up $20, what I'm going to do is I'm going to take $4,000, 4,000 shares off, right? That way, what I've done is I booked my profit on that position. Now the 1,000 shares is what I will be carrying for swing, which is typically the size which other people will be carrying as a swing if they're taking 20% allocation. So the remaining portion which I keep is really 20% then of my capital, right? Now that capital, the reason why doing this way is you're ensured that you're taking a profit in that trade, and as a result, you're just free riding rest of the trade, right? If the rest of the trade doesn't work, you're still going to end up with a profit on that trade. So this is called, it's like a reverse pyramiding. So you take a larger position and immediately sell into profit, and smaller portion of that position you let it remain. So if I like say put
it's very, very contrarian approach, isn't it?
Yeah, but like, and I have very high confidence that first day of the move, like today is a good example of that. Say Zoom, okay. Now Zoom started going up and I got in early and I had a big position, but I sold into strength, right? Now it faded later, but by that time I had taken my profit. Now in case this breakout fails, I'm not going to have a problem because the position which is remaining is very small, right? I already taken a profit, but in case it keeps going up for 3 to 5 days, I'm still going to make additional profit. So it's reverse pyramiding is what, or reverse pyramiding, or I take a larger size position and then fill positions into strength. And depending on the setup, depending on market conditions, I will do it like more aggressively or less aggressively. So this is a trade which I am in now. So here I took a big position, 5,000 shares. Today, I took out 4,000 shares. I'm carrying 1,000 shares with a closed stop. So by doing that, what I've done is I ensured that this trade is always going to be profitable, right? Because I've taken my profit, right? Now the remaining portion, even if I make my stop break even, which is not because I have profit in this trade, so my stop is higher. If it keeps on going for next 3-4 days, I'm going to make money. And that swing position is not really small because I still have 1,000 shares of Splunk, which is not a small position, right?
This is really cool.
These are tactics. So how to, like, anybody can trade this momentum burst, but when you add a series of tactics to it, those tactics can goose up your returns significantly, basically.
So this reverse pyramid is something your risk management approach, Pradeep, or there is something else?
No, this is like, this is based on like my study of these breakouts which happen. they seldom fail on the first day or the first 2 or 3 hours. If they have to fail, they will fail later. So I was looking at this, and when I looked at this data and when I looked at all these things, I said, like, there is a way to exploit this. And then the way I started exploiting it is I take a big position up front. My first big buy will be big buy, and then I pill the position. So what typically, if people were buying shares, like say if they're buying, most of the people who are doing swing trading, they put 10% or 20% of their account on one position, right? So that is the position sizing they're doing. I am doing 3-4 times that position upfront, and then I'm taking out 60, 70, 80% of my position off, and the remaining 20% which I keep is equivalent to the position normally the swing traders put, right? But by doing that, what I've done is, because of the way I structured that trade, now I upfront got my profit on the first or third day, right? So in this particular trade, I got my profit now. So on the 4,000 shares, I taken the profit. 1,000 shares is I'm going to let it run. It might run for 2-3 days more, right? And typically,
but you have secured yourself.
I'm secured. I'm free riding. Essentially, I'm free riding this trade now, right? So that's my strategy of free riding these trades. So that's
going
one of the
early,
reasons
getting
why,
your returns. Yeah.
Yes, and it frees up the capital to take another trade.
Very smart, Pradeep. And then any other risk management you take? I think this is a very aggressive strategy, but at the same time, I would say that this is risk hedged. So this is a very smart way of making money.
It's
What
risky,
other
but
risks?
like, see, everything in this business is risky, right? And that's why I'm very cautious about the market conditions. I'm always making these scenarios: what is likely to happen for next 3 days, what is going to happen, and then I'm playing safe based on that. So if I am coming into a market where I have very high conviction, then I do big sizes. If I have lower conviction, then I'm not going to do my reverse pyramiding, or I'll do reverse pyramiding with a smaller size. So I vary. I might buy 10,000, like a cup. In the beginning of July, I was buying 10,000 share lots. Now I'm buying 5,000 to 3,000 shares lot, because the market is more choppier. Likelihood of you getting hit is more likely, right? So it's really dynamically, I'm looking at every day what is called a situational awareness. It's like pilot. They're always before a flight looking at what is going to be the weather, what is going to be the landing condition, what is going to be the, is there any other problem, right? And then accordingly, you decide to carry more fuel or less fuel, or decide what is likely to be your fallback option, which is the nearest airport in case you have to land. So those are things which you have to basically plan in trading also, because this is like, why do they, all the pilots, like, they go through situational awareness training, is because flying an aircraft is a very risky business, right? The risk is very high. The insurance cost is very high and everything. So you don't want anything to go wrong. I approach my trading similarly. I know the risk. I'm very aware of the risk which I'm taking, but I manage my risk. I mitigate my risk, and by mitigating and managing my risk, I'm able to make money.
So Pradeep, one thing is there. Look, I think bull market, it's easier, or it's always easier to make money. I mean, that's my understanding, and it may be wrong. And the bear market, let's say you've been trading this like from 2000 or 1998 or something. Let's say 2008 financial
I've been
crisis.
trading since 1999.
Yeah, 99. So I think that was just after .com burst, right? Or .com during the .com burst. I think that happened before that. But let's say
after the .com burst, I started trading like when the .com burst was happening, basically.
Yeah. So how do you manage all those? Let's say 2008, 2009, we had such a bear market.
At that time, I was very young in this business. Like, so those first 2-3 years were where I was researching. But now, this 3 to 5 days move, the momentum burst, is not really dependent on market conditions, right? When the market was going down during the COVID-19 time, there are stocks like mRNA, and there are stocks like this, which were making moves contrary to the market was. So there are always opportunities when you look at these kind of opportunities, right? There's only like 2 or 3 weeks in a year where you cannot find anything, or you find short opportunities. Like in the last couple of weeks and days, I was looking at like in a shorts. Last 2 weeks, I was looking at shorts very aggressively, and I was like into things like CHPT and things like this. So I was looking at these kind of trades, right? Because I'm trading 3 to 5 days move. Whether it is long or short, doesn't matter. Obviously, I like to trade long side because a lot of my money is in accounts where I cannot short because they're 401ks or restricted accounts, trust accounts or things like that. But here, in the most active account where I don't have a restriction, I'll find shorts.
But Pradeep, one thing is there that coming out with this such a precise number, 3 to 5 days, I think that's something, isn't it? I mean,
it's just a function of like, see, fundamentally people get into this business and they do not necessarily have a understanding of the market structure. This is a market structure. This is like structurally the market always move this way. You can go and take like people have taken my method in other markets. They trade like somebody whom I was talking to today. He's trading my method in a Saudi Arabia market. A lot of people in India are using my method, or a lot of people have taken my method and they're trading other markets, right? And the inherent nature of the market moves in stocks has always been like this.
So psychology,
3 to 5 days, 3 to 5 days, 3 to 5 days, 8 to 20%. And that is not going to change. So I found the fundamental properties of stocks and I exploit that fundamental property. And this is not the only thing which I do. Like there are other fundamental properties, structural properties, which I found by research, which I exploit. Like the earnings is another fundamental property of stocks, especially on unknown companies. If there is an earning surprise, they're going to make a big move, right? So that is so inherent to the nature of the market. So any news which is surprisingly good or bad, here 195 million shares were traded, right? And from that particular something dramatic news has come in here, right? 647% move in just like a matter of 7 bars, right? So or like say here, LifeMD. I saw this particular stock, there was a news, and then the stock went up like, and I say around 40, 50 or 60%, right?
So Pradeep, how do you research? Let me ask you, how do you research? How do you came out with these hypotheses? What did you research? I mean, like
every day. Okay, I'm tracking every day. I'm tracking stocks which go up 20% plus in a week. I am looking at stocks which have gone up $20 plus. Every day, I'm looking at top 100 stocks which have made the biggest move for the year, right? So every day morning, first thing, I spend like half an hour studying this thing, which stock has made the biggest move. And then I go and study these as to what was the nature of the move. If you look at this stock, this is the biggest moving stock. But if you, again, you'll see that it moved in 3 to 5 day kind of a momentum burst, right? Whether it's to the downside or upside. So I study these, and based on my studies and my own research and doing a lot of deep dives like this, I have discovered these methods, and I exploit those methods to make money, basically.
And which trader do you look up to? I mean, or which books do you look up to?
I don't think like most trading books are going to give you a very crude trading ideas. You cannot become a good trader by just reading a book. This is a performance art. This is like dancing, or this is like ice skating, or this thing. In order to become good at it, you have to actually perform, and you really need to do a lot of deep dive and things. That's why people follow many people, and they're not as successful as the people whom they follow, right? Because they think what is written in the book is the way the person is trading, but that person is continuously evolving. He's evolving his strategy, and as a result of that, that person is basically changing tactics, or he's taken his trading to a next level. While the book might be saying something, right? And I was I was talking to somebody who sent me a message on Twitter on DM saying, I'm a follower of Mark Minervini. I've subscribed to him. I'm doing everything, and Mark is up 200% for the year, right? And this person is struggling to make 20% while he's following all what he's saying and all. And he's read the book. He said, like, I read the book 20 times, right? So why is it that the person who wrote the book is making 200%, and this person who read the book 20 times is struggling to make 20%? Because it is a performance art, right? Mark can perform his art, but his book is good. His book is very good. I know, I've met Mark personally, I've spoken to him. He's a damn good trader, but he's a leader, right? He developed his own method. He researched it. He found those patterns, and then he made them work, right? But the people who are following him, they're just following. They are blind, right? They're blindly following. So can they make the same amount of money? No, because they are not. They have F written in front of them, which is their followers, right? They cannot think for themselves. While Mark thinks for himself, he can read the market situation. He changed his tactics. He's doing more short-term trading. He's selling into strength. While these people are just like holding his book and trying to trade, and they cannot like make it work.
No, yeah, I think everybody wants to follow Warren Buffett and want to become like Warren Buffett. But
Exactly, means like
yeah.
this art, it's a this is an art, right? And it's the trading is an art, and good traders, the variability between a highly successful trader and other traders is very high. It's primarily because psychologically this is like you need to develop a procedural memory to trade a particular setup, and procedural memory development requires you to really have a right process and then practice the right process and do it right. Now that kind of a approach you cannot do by just reading a book. Yes, books are good. Books will give you ideas. You get some crude ideas about setups. You get general idea about how a person or what he's trying to do, right? But to make it work is really the art. So that's the question which I asked this person. Look, if you can figure out, look, and if you're doing everything, you read this book 20 times, then why is he doing 200% and why you're struggling? Then you will understand. Look, and the point is,
I think it's also about passion, because passion helps you innovate.
A lot of people have a lot of passion. I know a lot of people have a lot of passion. They've been trying it for 20 years and they can't even make 20%. Okay? So passion only can get you so much. It's your ability to find the market structure, which is most important. And many people don't know market structure. They have no idea of what market structure is or what is the inherent nature of market moves. So plus many people have very misconceptions about active trading. They think they don't know what actually active traders do. Most of the active traders, and I know a lot of them, I know highly successful active traders. So they do that approach which is similar to what I do, which is like sell into strength, take positions, flip part of it, keep part of it. They pill their position into strength. While the other people, like bulk of the things, if you look at what is written in books or what is written on Twitter and everything, is let your profit run, and if you take profit too early, you're going to kill, and nobody becomes rich by doing it. But that's exactly opposite of that. There are people who are active traders. They do it day in and day out, and they make big money, right? So what people read in a book versus what really is the practice, there is a gap. And the gap is primarily of leadership, because it's the same thing. You asked me about Canslim. Canslim was developed by William O'Neill, right? William O'Neill was a leader. He innovated, he found this pattern, he researched it himself, right? And he made it work for himself. And the people who are followers of him, they're just followers, right? They're just rewriting what he has written 30 years ago, 40 years ago. They're not checked whether that is true. Many things have changed since William O'Neill. William O'Neill himself, if he was trading today, he would not be trading the same way what he wrote 40 years ago, right? So, or like David Ryan, who was one of the person who was working with William O'Neill, and he is like developed a lot of these things, the rating systems and all. I happened to meet him during the Minervini thing, and we had a long conversation. And he's trading very differently from what is written in the book, up with handle and breakouts and all. And he says it openly. You don't have to meet him in person to understand that. He says it on Twitter. He's no more buying breakouts. He's found alternative buy points. And again, because David Ryan is a leader, he has got a self-leadership skills to do it. If you're a follower, you're waiting for somebody to tell you and give you a direction, right? So that's the problem. If you want to be a successful trader, you have to develop self-leadership. You should have the ability to find your own setups. You should have the ability to correct your mistakes, correct mistakes fast, develop situation, have innovative spirit, and develop something which is unique. And if like Mark Minervini developed VCP setup, which is a unique setup for himself, right? So yes, you can take that and try and make it work, but then explain to me why is the difference that he makes 200%, you're making 20%, right?
So Pradeep did bring to me the question. For example, I told you about myself that I'm more of a long investor, but I have a lot of the trading is really something which is, I'm getting interested in, and I've read a couple of books as well, as I told you earlier, right? What will be your advice to a person like me who wants to be a good trader? What should I do?
Yeah, see, there is a fundamental difference between a trader and an investor, right? As an investor, you make money by taking a volatility risk, right? If you've been holding Shopify for 5 years, you've taken a lot of volatility risk and you made money, right? Inherently, because investors take volatility risk, they get rewarded if they find the right stock, right? As against that, trading is everything in trading is about avoiding volatility, right? Why am I trading 3 to 5 days move? Is I don't want to sit into that. I don't know what is going to happen after 3 or 5 days, right? So in order to understand active trading, your approach to volatility has to change, or you need to understand it's a different world. Investors' world is very different, and traders' world is very different. This is a complete new set of skills. This is a new way of looking at the market. This is a very different way of understanding market structure. You don't need to understand market structure to make money as an investor, right? As an investor, you find a stock, you hold it for 5 years, 10 years, yeah, it will keep going up because you're taking a lot of volatility risk. While this becomes a microscopic art. This is really, you need to understand things at a very microscopic level, because everything which we are doing is not really bigger picture. It's like really finding the small things in somewhere and then finding an entry here and then getting out before it starts reversing, or shorting it here and getting out in 3 days. Now that approach, can it be learned? Anybody can learn, right? In order to learn that, you need to first understand market structure. If you understand market structure, I exploit only a couple of market structure, but there are many market structure which are exploitable. And that is where I would say anybody who wants to get into trading has to start with by understanding market structure. Because if your foundation is good and you understand market structure, then the setups which you build, scans which you build are going to work. Right?
What is market structure?
Not good. Market structure is, it's like inherently how the market operates, right? Inherently how the market operates. Like this 3 to 5 days is structural, right? And that is how the market operates. Or similarly, like in a Mark Minervini has a setup which is called VCP, which is volatility compression setup, right? The volatility compression, and I also trade a similar setup. Now, volatility compression kind of a thing is inherent to the market again. Whenever a stock which is in a uptrend, right? And here is an example. If a stock is in an uptrend, it's in uptrend, and then it has a series of sideways move, and the volatility is very low. Then from this kind of a volatility compression, most likely move is going to be a breakout, right? So if you know this market structure, then you scan for this kind of stocks. You find these opportunities, you enter them either ahead of their breakout in anticipation that it will break out, or you enter them as soon as they start showing a breakout thing. So again, in order to make this work, which is one of my setup, which is anticipation setup, I look for setups, stocks, which have these kind of things, which are like having volatility compression or range compression. And then I sit there and wait for them, or buy them, and then they go out, right? Or like say a stock, which is like this. Now, this is not a volatility compression setup. This is again a market structure, which is called as a exhaustion. Like here, selling has exhausted. There's a selling and selling exhausted. Now, most likely, this stock tomorrow is going to go up. Okay. Now, if I know this structure, then I can find trades which go up next day. If you buy here, like Goldman Sachs had an exhaustion signal. Again, like this is all using signals, like we generate this signal. So this day you get a signal, right? That this stock is likely to go up next day. And then next 2 days,
you use candlesticks or?
No, it's not candlestick. It's based on exhaustion. Like basically, I'm scanning for exhaustion, short-term exhaustion, basically, right?
Okay.
So again, if you understand exhaustion as a market structure and you studied 5,000 examples of exhaustion, then you know in real life how you can find them. If you find them in real life, you make money, right? And you buy this exhaustion setup here on this day, closer to the end of the day, and then you make clean 2 days. Stock is up $22, right? So these short-term things, you have to discover them. You have to find them. And here again, like exhaustion, and then the market went up. So once you find those kind of things, and you know how to scan for them, then you start making money. If you don't know, then it's very difficult, right? And that's the biggest problem for people who is coming into the industry, especially new traders. They just get in, and they have no foundation in terms of market structure, and they just
what
start
I'm
trading the setup.
What I'm understanding, Pradeep, there is no easy money or copy money.
I wouldn't say that, like, it's not, there is not easy money.
Or
and it's
copy
like
money. You can't copy
yeah,
the money.
copy money is not there. Self-leadership is important here. So you can't just follow somebody and become successful.
Yeah, I think I have just 3 more questions. Now, one question is my favorite stock or my favorite entrepreneur or my favorite company is Tesla. Do you want to go to Tesla stock and give me some comment on that?
Yeah, so Tesla, I have traded this multiple times, right? And so I traded it here, right? And like, and for that, actually, like, and here, and this is another thing, which is like, and it was up only 0.41%. So this is some of the things which I anticipate, and then from here it made a move. So currently it is in a sideways move. It's only in a sideways move. It has to break out from here for it to make money. Just in sideways move. Long term, like, and it's in sideways move. When it breaks out of here, then it can make. But remember, okay, as of now, Tesla has a capitalization of 629 billion, right? So what is the probability that Tesla is going to make a big move? If you look at the entire universe of stock, okay, the entire universe of stock, and if you sort by capitalization, which should be there somewhere here, or I'll add a capitalization column just now and show you, there are only handful of stocks which have a capitalization of Tesla size. Okay.
Yeah, there will be about 8 or 9.
8 to 9 stocks might be at best, right?
Yeah.
So you're looking at, say, you have 4 stocks with 1 trillion plus. Then you have, like, in a Tesla is 7. So can Tesla become a 2.4 trillion? It is possible, right? But many stocks don't make it. Most of the stocks, very few stocks even make it to 500 million capitalization, right? So I would say, like, a lot of things have already happened for Tesla. If you have to find if you want to make big money, find the next Tesla. The next Tesla will be in some category where, like, Tesla from its, like, an opening price has made, like, say last year it made a 800% move, right? So that was like that itself tells you how much it has gone up, right? So as stocks become big, yeah.
You have any suggestion on next Tesla?
I'm not an investor. Right? And I am not an investor. You're asking the wrong person. I don't know anything. I'm just saying that Tesla's probability of making 400-500% move is very low.
Very low.
Like NIO was like, and I say, look at NIO currently. NIO has 76 billion, right? Here is where I found NIO, somewhere here, right? And 433 million shares were traded. So that time, from there, like, and stock started going up and all. But that time, the capitalization of NIO must have been like, say, currently it is up like roughly around 1300. So 76 divided by 13. So if you're wanting next Tesla, look for stock which have capitalization below 20 million.
Okay.
That's where you'll find the next Amazon. That's where you'll find the next Tesla. That's where you'll find the next Apple. That's where you're going to find even Shopify, for that matter, has a huge capitalization. That's one of the position which you're holding, right? And which we're discussing. So Shopify still has a potential to go up because it's 192 billion. But not many companies make it to 500 million. Not many companies make it to 500 million, right? So keep that in mind. So these are good for trading afterward, but even the companies like Coca-Cola and all, like 243 million. So
Coca-Cola is pretty dead, I guess. I mean, I'm sorry.
Beyond 100 million, yeah, anything is possible. Never say never, but your chances are lower of making big returns, basically.
Yeah, that's true. That's true. Now, Pradeep, just tell me one thing. Any trade you remember which has whipsawed you, which made you losses?
Like that happens all the time.
Tell me the biggest which bothered you a lot.
Recently, like here, I bought this on this day and bought like really big position. and just like within minutes of me buying, it started going down, and I had a stop, but it ran through my stop, because when your stop gets it, and I lost like 30,000 in blink of an eye. I lost 30,000. Fedex, which was another one, which like, and I shorted Fedex on this day, which was a good setup as far as my model was concerned, because it was like breaking down, and next stage gaps up, right? It gaps up, and I had to like close my position. So losses happen. Losses happen all the time. It's part of the business. It's not something which bothers me nowadays. But I know how to recover that loss very quickly. So do losses happen? Yes, they happen all the time.
Which one was the, I mean, again, I know there's a lot of positions which have gained, but which one or two you remember most, which was really gratifying to you?
Nowadays, because I'm like dependent on this thing, lot money trades to make my year kind of thing. But if I had to talk about recently, Amazon was a very gratifying trade, because from here entry on this particular day, in just 3 days, it made 260, 250 points move. So that was like a big thing. NVDA was very good, where I sold early, but like NVDA from here to here was like, means I had a position from here also, but like this was, I sold it on that day. It was a good trade. If you're asking like, just yesterday, but that was an intraday trade which I did, and I made like tons of money on that intraday trade. Not 2 days ago, not yesterday, day before yesterday, where I made 140,000 when it like when it started going down. I shorted on this particular candle, and it went down from $27 or $30, and multiple times during the day it again broke down. So there are
nice.
One single trade doesn't really nowadays matter more. It's a combination of adding these kind of 100,000 here to 100,000 there, 50,000 here, 60,000 here, 30,000 here, and then that's how it operates. But last year, in terms of big trades, or like some of the big one was Fastly, where I had a big position. Fastly was good, Farfetch was good, FPCH was good, GRWZ was good. I had Peloton also. Zoom, means you name a stock. This is another method which I trade, where I scan for stocks which are extraordinary high volume. So that went up 238%. There's a 52 million shares were traded there. Then bunch of them, man. Like, and I do so many trades in a month. I do so many trades. Like, it's just everything keeps adding. The bucket keeps getting filled, kind of a thing, right? So Moderna, I like, and I traded it and doubled my money on in Moderna. Bentex also, like, not Moderna, I only got 56%, but Bentex I doubled here, like, basically somewhere here, and then sold it, like, basically. So there are a lot of trades. This was recent one here, ASAN, which I found when it was reversing, and that made big money. So a lot of them.
No, I know. Look, I think it's fascinating. Totally, I'm kind of into it now. It's really amazing.
Yeah, I know. It's like it's fascinating game, but like I can also become. If you're profitable, then it's a very fascinating thing. But then there are people who get into this like this, and then they don't make money, and then they continue because the game itself is so fascinating. It's like Las Vegas is so fascinating, right? So this is another trade which I did, where I bought it because it had that big volume, and it made.
So
you have to be very clear to become profitable as fast as possible.
Okay.
The real fun in this game is to be becoming profitable as fast as possible. Otherwise, you can death by 1,000 cuts, or like people remain in this for years, and then they have suboptimal returns. Then
obviously you can get demotivated. You need wins to keep you going.
Yes, and that's one of the reasons why you will see when you really talk to a lot of traders, or you see the Twitter or the typical conversation. And especially if you talk to some of the older traders who've been hanging around for many years, they're extremely bitter. They're very bitter. They're very negative because many of them had a very tough time making money, or they had ups and downs. So that colors their life. and they come across as very, very bitter. They're like, very skeptical. And that's because of the negative reinforcement which trading provides.
So
Right.
how do we, again, this I mean, I was thinking of finishing the interview, but just one more question: the mindset. How to get that mindset then?
The mindset is a function of like really, if you start hitting wins, right, then your mindset changes, right? So I did a video like a couple of weeks ago, on how to shorten that learning curve and become profitable faster, right? In order to become profitable faster, you need to just like find one idea. What happens with people is they try and become like, they're like, a lot of time people talk to me, so many people talk to me on Twitter or something, and they send me messages, and then they say, oh, I'm trading this setup by Mark Minervini, I'm trading this setup from someone else, Trader Lion, or some other company, and then they're trading 5 different things, right? If you're trading 5 different things, you're set yourself up for failure. For my first 10 years, I traded only one setup, which was momentum burst, right? So if you can narrow down to one idea and make one idea work, you just need one setup to make a lot of money. So be less ambitious in terms of setup. That's one advice I'll give you. The most important advice I'll give anybody who wants to get into this business is be a leader. Be a leader. Okay. Nobody in this business I know who has made big money is a follower. Okay. And they're all leaders, right? They're like, they found their own setups, or they took somebody's setup, made it work for them. They overcame their own problem. Nobody in this business I've seen has become successful by taking somebody else's trade. You cannot do that. Okay, it doesn't work that way. You have to have very high self-leadership quotient. You should be able to find your way, fix your problem. If there is a problem in your trading, you should be able to fix it in 48 hours, 3 days, 7 days. Have very high self-efficacy beliefs, then you will make it. If you come in with the intention of following somebody, I can guarantee you that that person is not going to make it.
Wow. I think, look, amazing stuff. Thank you so much, Pradeep. I mean, I always hoped for a good interview, but I think this is really gone beyond my expectations. I mean, I feel
No
pumped.
problem, man. It's fun, like
And
I say.
yeah. Thank you once again. I'm sure people who will see this, they will learn a lot. And I think hugely gratifying work which you've shown. Where can people find you, Pradeep? If let's say normal people, let's say
They
from
can like
Singapore,
if you
US.
search like for my site is StockB. StockB is the thing. So people, if you search for StockB, you'll find my public blog. On my public blog, all the information. If somebody is really serious about making money, okay, trading some of my methods, if they search for my public blog, there is all the information necessary to make my methods work. I've not been updating my Zoom YouTube channel a lot, but there is a YouTube channel where there are hundreds of videos which I made showing people how you can make money using this. So the information is there, right? But again, if your idea is to just follow me, the chances are very low, right? I'm telling you upfront, basically.
Yeah. No, that's all right. And do you use what platform do you use? Is it TD Ameritrade?
I use Telechart. I use Interactive Broker. I have Fidelity, an account with Fidelity, Merrill Lynch, and Interactive Broker. And I use for my trading this thing. I do use MarketSnip, but it's not a major thing for me. Then I have like, because of my capital size and my ability, I have a lot of news services which I use for finding information. But a new trader doesn't need to start with all of that. I would say just take a software like this. This costs around $20 a month, and then spend 1 week going through 5,000 stocks and find momentum burst.
This is Telechart.
Momentum burst. Yeah, this is Telechart, and then you can become good.
All right. Okay. Thanks, Pradeep. Once again, truly enlightening stuff, and experience shows here. That's 20 years of your experience shows here.
Yes, I've been doing this same shit for so many years, right?
Yeah.
So I know what I am doing, basically.